Okay, so the important developments now are what's been going on the daily chart and what we expect to happen. Okay, so this is the updated daily chart and the current moves, what's actually going on. All right, so this is the updated daily chart and we've had all the labels rounded up. Okay, the market appears to be doing, I think it is now confirmed, doesn't even appear to be doing, it's really confirmed that the last move higher into, remember this bounce that we're always looking at, where the market bounces on top of that yellow label level 1. We were thinking we're gonna be doing wave 5. It's true we could be doing wave 5, but this is actually an A, B, and a C formation inside an ending diagonal. The market is really doing an ending diagonal. We're quite sure of that. We've had all the labels now proportionally related. There was a wave 3 here. All of this has been a 4A. This is an ending diagonal here shown inside of that green bracket. This is a 4B. That's all it is. It's not a 5. The market is going to be doing a 4C. We already witnessed that correction on 4C that we have been segregating on the 4-hour chart. Now we're going to be, this is leg A into 4C. This leg A in red here is the first leg into that 4C here in yellow. The market is currently doing a B, all right, a B, all right. Sorry, the market is currently doing an A and then a B and a C into red leg B into that 4C. So sorry for the confusion again. To recap, the market already did the 4A here that ended at that level 3. Now the market is going to be doing a very deep or a very prolonged wave 4. The first leg A in red is already finished into that 4C. Now the market is going to be doing a 4B. This is the second leg into that 4C in yellow. This should be a 3-swing move, an A and a B and a C. We're here today inside of this ellipse. There are 2 necklines to test. There is this neckline. All right, so this first leg A here in yellow is actually an ABC formation in white. After you finish it, there's going to be another ABC formation down in yellow and then a big 5-wave swing into C to 68,000. So what we're buying now will not take us to 68,000. What we're holding now will not take us to 68,000. What we are really holding now will just take us to the next neckline. When we go 4 hours, we can envision this, but we are at this neckline. There is inverted double heads. We're going to take this neckline out. We're now testing 51,260. Over here, showing at 51,660. We're going to take it out because we have good positive momentum on the intermediate term cycles, 1 hour and 4 hours. So the final target should be 57,000 and 58,000, 57,937, 55,000. Maybe we fall short. At that point, this is the end of wave A. There's going to be an ABC down. We get back again to these levels that were at 42,000 and 44,000 and so on. All right. So now we would understand the exact supports that we're looking at. Again, this is the higher degree wave 3. There already has been a 4A in yellow, a 4B in yellow. Now there's going to be a 4C in yellow. This is shown here. That 4C divides into 3 segments, an A in red and a B in red, and there's going to be, of course, a C in red, longer time frame. We're now inside of this yellow ellipse. This yellow ellipse, if you are ultimately going to be doing a wave B in red showing here, is going to be an A, B, and C showing in red. We're inside of this yellow ellipse. We're just doing an A, B, and a C all the way to that neckline. Market has already done an A and a B, is breaking out currently into a C. We would also want we have strong positive momentum. It's not shown here. All right, when we go live, we check it so that we understand what we're standing on. Okay, so it's the same leading diagonal. All right, the market will simply is currently trading between 41,000. We know we bounced there at around 42,500. We're now at 51,700, exactly where we are right now. Okay, this means that any moves above 51,700 should be contained 50%, 38.2% between this level and 100%. 100% comes in at 65,000. So we don't want to get carried away to think that this is going to go all the way to, it could of course, but it would be wishful thinking, even on positive momentum. The first leg up is just going to take you 38.2%. and that's where we're looking at 58,000. Looking here at 60. It's not shown on the chart, unfortunately, but we can make that projection when we go live. You're looking at between 60 and 55 here, just above this 78.6%, where we are right now. We are now at 78.6%, around 51,200. So we take this out, it spikes to the next neckline so long as there's still positive momentum, and then reject. We'll go back to test 61.8, maybe go down to test something in between them before we move higher. This ascending triangle, this is now the whole longer term plot of Bitcoin. You find there is some kind of a cycle transition axis here between 1 and 4. We're not drawing it, but this is of course a wave 1 and wave 2. This 4A here would mean that the market is bullish, because on the longer term weekly chart we bounced at level 1. All right, and therefore you would still expect continuation higher. We did of course a higher high than the old market top, but the momentum is really still bullish on the weekly chart. So maybe at some point this ending diagonal, if the fundamentals warrant it, will give way to this ascending triangle. We all remember this projection all the way to 125. So you would consider the market is really keeping its options open. All right, let's move straight. We just remind ourselves of the bounce that was at level 1. This is a delay chart now. We are out of the wedge. There was a wedge here and we were looking to be out of this. We're attacking this neckline over here, and this updates of course our own current 4-hour charts. All right, for trading purposes, it's very important to note that there is a lower degree. We call it a lower degree 1-2 because it is the last cycle before there was a breakout. There is a lower degree 1-2 here. We know this because of this internal indentation in negative momentum. So we're only buying into this level 1-2, and what we're seeing now in the market is a 3. All right, so you always want to buy as close to the internal 15-minute fib projections as possible, because this is just a wave 3 and it will of course attack the neckline 52,245. That's why we think we're going to get 53. Okay, but in reality you would expect even to get 55 and 54,866. There's 55,400 here. Okay, before you get rejection. We're looking of course at that. There's a 1-2. This is just going to be a 3. There's no 5. Internally there's a 1-2 and a 3-4 and a 5. We make projections of course, but only momentum will tell how far that level 3 will go. If it will just reject below internal level 1 here, at internal level 1 here in yellow, you're looking of course at 54,900 and 54,866. If this is of course just ABC formations, if we manage to try and contest that next neckline, we're looking at 58. We always have to monitor momentum very strongly. At 58,000 and these levels here, we're gonna have we think we're gonna have another very strong rejection. Remember, this is gonna be first leg of ABC into higher degree red B. There's going to be another ABC down, second leg into high degree red B, before we have another ABC leg up. We all remember the daily chart. As traders, we're just focused on 2 things. We're buying into wave 3. It's a wave 3 when we get to see it on the 1-hour chart, so it's always a buy all the way at least to 54,866. We have a hedge below level 2. That level 2 is actually coming in currently at 48. As we move higher, it just becomes a hedge below internal level 2.